Good morning, traders. Thanks for joining me here on Tuesday, the 26th of July, 2022. This is episode number 2280. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Just now, the IMF forecasts, economic outlook, world economic outlook had come in looking pretty grim there. The baseline forecast is for growth to slow from 6.1% in 2021 to almost half, 3.2% in 2022, and in 2023, global output is seeing growing by just 2.9%. The market dropped quickly across the indices. And if you've ever wanted to see what an SOC trade looks like, that was it. Market comes right back. If I was to represent the market in terms of the number of words I speak this morning, I would be out of words at this point because it is just completely balanced. There's no action whatsoever, and overall just pretty darn dead. Let's take a look at the Convergent Trading pre-market summary sheet. The market posture is mixed to negative, just on the edge of being mild risk off this morning. The earnings that have come out were from Centene GM. GM reported a drop of 40% in its income, where they've had tens of thousands of cars having been incompletely built because of semiconductor shortages and material shortages. They posted an unusual loss out of China, their second largest market. GM is cutting on discretionary spending and hiring. So really important there. Anyway, Centene this morning, we saw GM come out, UPS, General Electric, Coca-Cola, 3M, McDonald's, UBS Group, and others. Those are just the major ones. There are many earnings. Raytheon came out basically in line, and so on and so forth. Chubb comes out after, actually. This afternoon we have the real majors reporting. We have Google, which, by the way, has an estimated revenue of $70 billion for Q2. Wow, that's a lot of revenue. Google, Microsoft, which comes in at an estimate of $52 billion. Microsoft, Visa, Mondelez, Chipotle, and many others as well after the market. So, and then to layer on top of that, we have FOMC tomorrow. And so the market's really in a holding pattern currently. I still do hold to the discussion yesterday about indications in the auction, in the profile, that the S&P minis are looking to turn over. They look to be making a rounded top here. So that's that. We just got the IMF World Economic Outlook. We also got Case-Shiller. We're looking for new home sales. This is an important one at 10 o'clock. Consumer confidence also at 10. And then we get the API crude oil stock change after the close at 4:30. And Australia reports its inflation rate at 9:30 in the evening. In case you're trading Asia, be aware of it. Turning our attention to the S&P here at the middle of the page, the S&P is completely balanced. The volume's not too bad, 162,000 contracts, but the range is awful. 19 and a quarter points. The point of control holding at 39.57. This wonderful area. And that's what we have. So let's take a look at what was expected yesterday. Yesterday, I was looking for the market to test up. Let me make sure I've got the right pen here. Was looking for the market to open sideways in an open auction, test up, and I was looking for it to fall and then eventually test the 39.60, the 39.50. And if it cannot hold the 39.50, the 41 half would be next. If we give up the 41 half, then we are likely to push to 39.09 is what I talked about later in the session. So, and then above, if we get back into the 4016, then we're looking for 4072 and 4090 as the key indications, and that would be scenario 2. So yesterday, scenario 1 was pretty much on point. As I wrote here, 3909 below, and then above it's 39.97.75 first, and then 40.16, and then from there 40.72.73 or so, and then 40.90. But yesterday it really could not break through and hold. Yesterday was an outside in trading day. If you recognize that early, then you probably made money. But for me, it was make money, lose money, make money, lose money, make money, lose money, and that's the kind of day it was. Just learned early on that I can't take breakouts in yesterday's market, and so I stopped doing that. Look at that SOC trade. We could see it better in the active chart. See that? This is a typical SOC trade right here. News comes out, disrupts the auction extends. You can see that we had a ledge here from the overnight session. We broke the ledge. There was very thin trading, and what does it do? It goes right back to the SOC, the scene of the crime, and it resumes its action. A completely Gaussian profile this morning. Look at this profile. I mean, that is a profile that's just a beauty when it comes to the statistics books. So I want to remind you, on days where the profiles like this, averages make sense, right? So an average ATR, those kinds of things make sense because the distribution is normal or Gaussian, and you have something that looks like it's out of a textbook. Nature doesn't generally does not represent balance in this way. It represents balance with a fat tail of some kind, either with the distribution to the downside or the distribution to the upside, something like that. But today, completely balanced, and what we have is the point of control. The VWAP in the mid, essentially hanging out at the same price. This is likely to be a choppy open, but given that we have done so much volume, 163,000 at this point, since we've done so much volume, this may be a launching pad as the home prices come out or consumer confidence misses by quite a bit or whatever. Also, the delta has a pretty negative skew here. I still believe that we are likely rolling over. So let's pull up. Let's go to today. Here you could see that we've been one time framing up. And yesterday we were one time framing up, but we also have a lower high. So yesterday was a complete inside day. And to me, as I indicated yesterday, it is likely to roll back over. And again, the price we're looking for on a retest down is 39.09. That's what I'm looking for. If it fails to get to 39.09, then look for the 97 and then look for the 16. Don't know what it's likely to do given that we have such tremendous micro and macro influences today and tomorrow, but really this is the time of year, this is the time period where we really need to exercise decent caution, and given that yesterday's low is at 39.46, the low before that is at 41.50, this is very likely to breach the one time framing up. This is a T. Time framing up on the daily. Okay, so we are likely to breach the trend that we have established on a daily chart, and that's likely to precipitate in some quick drops. We have some single prints that are still open. You can see them shaded here into 39.20. And then from there, 39.09 becomes a key target. Given the consolidation in the overnight session, again, just like yesterday, my bias coming in, the more likely play, not that I come in and trade a bias, but the more likely play or the bigger trade of the day is to the short side. That's what I'm thinking this morning. It's very quiet in chat today, just as quiet as the market. Is everybody on the beach enjoying their vacation? Did you all go and hang out at the pool today? Is that what's going on? Numbers are way down. It's very, very normal for this time of year. Let's look at the relative delta. So looking at the relative delta this morning, looking at the relative delta this morning, you can see the large lots dominating the selling, and the delta, the cumulative delta, is following the large lots. This is a pretty decent clue that we are likely to spill over into the open here. Okay, small lots trying to hold it up, but small lots gave in right here, causing the cumulative delta to drop. Very large lots, not much participation. I mean, negative 491, that could be swept up in one order. Not much to talk about there. So we know that the what this tells us is that so far, the market is dominated by short time frame traders. And it's likely to respect day type levels. So when you look at your VWAP, mid, IB, prior high, prior low, today's open, overnight levels, these become important levels under these conditions because the shorter time frame participant is likely in control this morning. So that's what we're looking at here. There's really not much else that I can say about this. I mean, looking at the depth here, we see some pretty solid bids down below 39.44, 39.40, but really not very meaningful because the market is pretty decently far away. The order book doesn't give us very much. Here's that news event right here. Pop down, pop back up, and then just go sideways. Now we have a downward skew, which makes sense. It's following delta. So today we have basically the same plan as yesterday. There's not much difference to what we have today, and it's very likely to create a situation where we follow yesterday's plan, which is to look for the 40s to be busted, and for us to push into the 20s, and then ultimately to push to 39.09. That's the main trade idea. If we fail to push and hold lower prices today, if sellers fail to gain ground and hold it, then we are looking at a test of the day levels from yesterday. So you need to pull up your day levels from yesterday, like yesterday's high, today's full session mid VWAP, as I discussed, and then you're looking at 39.88 to resume the push higher through the middle of the double distribution from Friday, and then we're aiming to push the point of control to 39, the point of control that's naked now at 39.97, and so on and so on and so forth. It's really not there's not much to say here other than just take it easy, okay? I'm going to leave you with this announcement again for tomorrow's event. Tomorrow, EdgeClear is sponsoring the Futures Radio Show, and they're going to have Shy Girl and a bunch of macro, some really important macro participants and FinTwit people. I would highly recommend you listen in, and of course I'd highly recommend getting in on the giveaway, $6,300 to be given away in services. The giveaway ends at 11 a.m. Eastern. The giveaway ends at 11 a.m. Eastern. You can participate at edgeclear.com/deli. The show is at 12, and a reminder, FOMC is at 2, and the conference is at 2:30. So it's well before the FOMC. It's during the time period when you shouldn't be trading tomorrow. So tune in, edgeclear.com/deli, and enjoy the show. It's an hour-long show, and be sure to enter the giveaway. The giveaway is for New Squawk multi-asset subscription. The grand prize is a subscription for 1 year worth about $3,600. And then the second and the third prize are also free subscriptions, but for a shorter period of time. And for everybody else that could not get their name pulled, there's an offer that will be announced tomorrow as well. So I urge you to participate in that, at least listen in and hear how these participants are trading these markets. Again, it is pinned to the chat, to the live chat to the top if you want to find the URL, or go to edgeclear.com/deli. I'll leave you with that. Again, no different plan today than yesterday. We have the same scenario as yesterday. Good luck. Make sure you watch your risk. Take care.